Hello guys and good afternoon. Wherever you're watching this from, my name is Status Kamau, and in today's video we're going to be talking about introduction to forex trading. And in case you traded before and maybe things didn't work out, or maybe this is your first time ever to ever want to trade the forex market, make sure to watch this video to the end. Get the skills and how to get started. That's too much. Let's get to the video. And so guys, we are here, introduction to forex trading, a complete guide from beginner to advanced. Directly going to what is forex. The foreign exchange market, forex, FX or currency market, is a global market that includes buying, selling and exchanging currencies at current or determined prices. Forex market runs within a network of banks electronically, so you don't meet with anyone. It is the largest market in the world with over 5 trillion US dollars traded in a day. It is open 24 hours, 5 days in a week. Why consider forex trading as a business? Flexibility in hours. Forex trading is open within 24 hours. So you can trade in the market anytime you want. You don't have to spend the whole day to be a successful trader. 2 to 3 hours in the market, it's enough. The second one is anyone can start regardless of their knowledge or experience. You don't need to have any degree, any masters, or any finance or business related courses to be a successful trader. Small startup capital. For many businesses, you need to have a lot of capital, and a huge one for that matter, for you to be able to start that business. But in Forex, it offers minimal capital to start with, and from there you can grow your capital. The fourth one is highly profitable. Forex market is the most liquid market in the whole world, so creating many opportunities for traders who are speculating to buy and sell, and in the event make some cash. The last one is ability to grow. And then on next one, we're going to look at the requirements to forex trading. Decide how you'd like to trade forex, and I believe everyone would want to have a successful story when it comes to how to trade forex. Learn how the market works. Open an account, build a trading plan, and this is where most traders fail. You have to have a trading plan and then trade your plan, and you'll see immense results. Choose your forex trading platform, and having said this, I would advise us to download. You go in Play Store and download MetaTrader 4 or MetaTrader 5, and you're good to go. It is free, so whenever you download, just open. It opens with a valid demo account for you to be able to practice. And lastly, you can be able to open, monitor and close your trade. Coming into quotes, currencies in forex market is expressed in pairs termed as quotes. An example below is the British pound against the euro. The British pound is the base currency and the euro is the quote currency. The same case with the US dollar and the Japanese yen below. Having said that, we go to the different types of currencies we have in the forex market. Currencies are categorized into either major pairs, minor pairs, exotic pairs, or regional pairs. Now, the major pairs, they are the majors because of this reason. They make up to 80% of global forex trading. An example is the Euro USD all the way to the AUD versus the US dollar. The minor pairs, these are the less frequent traded currencies, and they often feature major currencies against each other instead of the US dollar. Rather, they don't have a US dollar either as a base or a quote currency. The exotic currency is a major currency against one from a small or emerging economy. In economics classes, they call them the third world countries. And an example there is the sterling pound against the Mexican peso. As you can see, regional pairs classified by region, such as the Australian dollar versus the New Zealand dollar. Moving on to what is a PIP, price interest points. Basically, a forex PIP is equivalent to one digit movement in a currency pair. How are PIPs measured? We're going to categorize this into two. We have the US dollar case, and we're going to look at another one, which is the Japanese yen case. And for this case, a unit movement in the fourth digit, and this is very important, in the fourth digit of a pair or quotes with USD currency, either as a base or a quote, equals to one pip. You can see the example below. The British pound against the US dollar, it was 1.35374, and now it's 1.35384. From 7 to 8, the fourth digit, that implies that is a one pip move. And let's look into a chart with the same currency. There you go, you have the currency there. This is a chart, don't pay so much attention into it, but rather just to show you, uh, when you have that downloaded platform, that is the MetaTrader 4, you'll find pairs or these quotes, and you will be looking for opportunities to buy when low and sell when the market is high. And you can see from here all the way up here, there's a whole lots of pips, and that is where people make money. In fact, they call pips, or they refer pips to be money. Aside from that, we go next to our second case, which I've just said we are going to look at the Japanese yen case. Usually, a pip is equivalent to one digit movement in the second decimal. You can see the example below. 114.463 goes to 114.473. It's a one pip movement. And we see a chart of the US dollar against the Japanese yen. This is just a chart, and as I've said in the previous chart, you'll be looking for opportunities to buy when the market is low and sell when the market is high. And from here we go to what we term as lot size. Now we've said what a pip is. It is a unit movement in a currency. Now we have different lot sizes. We have a standard lot size, a mini, a micro, lastly a nano. A standard account has the biggest volume with the biggest value in a pip, which you can see on the US dollar per pip case. With a standard lot size, you're going to make $10 in one pip. With a mini lot size, you're going to make $1. With a micro, you make 10 cents per dollar, or rather $0.1. And lastly, the nano lot size, you're going to be making 0.01, which is 1 cent per pip of a dollar. Now, let's look into this. Assuming there are four people with different lot sizes, a standard, mini, micro, and nano, and all of them open positions in the forex market, and they all cover a 10 pips movement. The standard lot size one will earn a total amount of 100 US dollars. The mini one will have a total of $10. The micro, you can see it's $1, and then lastly this guy will be making $0.1 in 10 pip. And I advise to most of the beginners, start with the micro one, and then from there you can grow to the mini and then to the standard lot size. And we'll need to look at the three most common forex trading analysis. We have the fundamental analysis, the technical analysis, and sentimental analysis. Fundamental analysis: basically, traders rely on economic news such as inflation, GDP, manufacturing, and economic growth. News are either good or bad. And having said that, good news makes a currency's nation to appreciate, and the vice versa also is true. Technical analysis: this is simply the historical study of price patterns and movement, looking for opportunities to trade. It is arguable that most of the successful traders, or the biggest number of forex traders, use technical analysis. And then lastly, we have the sentimental analysis. Here traders combine both the aspects in fundamental analysis and technical analysis to open their trades. And in case you're new here, before we continue, make sure to click on the subscription button below. And lastly, we go to technical analysis. This forms my next video. We're going to look at the introduction to candlesticks, types of candlesticks, candlesticks chart, and then reversal candlesticks. You can see besides that we have a chart there. Whatever you're seeing there, those are the candlesticks. They are many and they are different, and from one you can gather a lot of information and be able to open positions in the forex market, and you're able to make profit. So until next time, see you.